they're going to have the need for banking all the way through their life, whatever that may look like. Like whether it's a, cryptocurrency world or whether it's a fiat money world, they're going to need the use of money.
What we're traditionally taught to do with money as it relates to our children is to save for their secondary education. So we're taught to save for their university. In Canada, we're using a product often people use a product called an RESP, and having those saving mechanisms so that there's money for university education. The thing that I love to bring up with people is to say, let's think a little bit bigger than that for our kids.
Hey, this is Cole from Lifetech. I have Dan, Allen, and Liz Lamond today, two infinite banking practitioners from Ascendant Financial. We are going to discuss something very, very near and dear to my heart. Children. Do you know a child? Do you know somebody that has a child? It's likely you do. What do you think that your child, the children in your life, what do you think their future looks like? Do they have financial literacy or do they have financial stewardship in their life? My question to you is, do you know the difference between financial stewardship and financial literacy? Do you know, and I'm going to come at you very straight with this, the power of a whole life insurance contract and the relationship to the children in your life? If you're watching this channel, it's likely you might. If you're watching this channel, it's likely you don't. So we're here today with two infinite banking practitioners to unpack the power of whole life insurance, infinite banking for children. I'm just going to hand it over to the experts. Dan, Liz, either one of you can weigh in. Fire away. What do you think about whole life insurance for kids? Infinite banking for kids, as it were.
Hey, great question, Cole. Thanks for a great introduction. And, as soon as you start talking about children, being a grandfather and having grandkids and children, it just takes me to a place really, when I think about it, what do I really value in life? Most, on the top of my list, right at the top, is my family. And children are a key part of that. And when I think about infinite banking and I think about children, I think it's a great way to educate our, the next generation and the generation after that about financial literacy. Like, how do you educate them in a way that they understand that they're going to have the need for banking all the way through their life, whatever that may look like. Like whether it's a, cryptocurrency world or whether it's a fiat money world, they're going to need the use of money all the way through their life. And with infinite banking, what does it do? You can start it when they're very young, and the earlier you get started in life, the better. That's, we know that. We're basically, life insurance agents, just don't tell anybody. But we know that the best time to insure someone is when they're 16 days old. And, the sooner you put that asset in their life, it stays with them for their whole life. And I could go on, but I want to pass it over to Liz because I know she's always got great value to bring. So, Liz, what are your thoughts about children and infinite banking?
Thanks, Dan. I think a big piece for me is conversations that I have with people, and we talk about what we're traditionally taught to do with money as it relates to our children is to save for their secondary education. So we're taught to save for their university. In Canada, we're using a product often people use a product called an RESP, and having those saving mechanisms so that there's money for university education. The thing that I love to bring up with people is to say, let's think a little bit bigger than that for our kids, because our kids are actually going to need money for the whole of their life. So when they finish their university education and all that money's gone, what now? Because once you finish university, unfortunately, you don't tend to have a lot of money still, but you still need to be able to buy a car. Eventually, you might want to put a deposit down on a home. There are going to be so many life events that require capital for that child. And so just getting parents to think about it, what if you could create a system for your children where they would have access to money for their education, but they were also building an asset that was going to last for the whole of their life? And just the power of that in terms of what they can create for their family and legacy is just mind-blowing to me. And, you know, to something that I know Cole loves to say is about that, you know, it should be handed out pretty much at birth, such that that people have this opportunity, because it really is a game changer.
If you wait around to the end of the video, I'll remind you of what it would look like if I was to run simultaneously for president and prime minister. So stick around, and I'll tell you exactly how to do that if you want to achieve that. So, Liz, you talked a little bit about generations. You know, there's something that in the infinite banking community and the kind of leveraged whole life insurance strategy we talk often about is, you know, using $1 multiple times, the and asset kind of approach. Maybe unpack for our viewers, you know, what it might look like insuring a child, and how that $1 into that child's life can kind of instantly affect 3 generations.
Yeah, for sure. So when a policy is put in place on a child, then the policy owner will be usually the parent, but certainly an adult who's going to be the owner of that policy. And so the parent then has the ability to recycle money while it's growing during that child's lifetime. So that's something that's very powerful. And, you know, as if you've watched previous episodes, you'll know I work with a lot of real estate investors. And so it's quite, you know, talking to them about the fact that they could be using the liquidity within this asset, even of their child's policy, to be growing other assets to the benefit of the whole family. So as that money cycles back through, it's also the option of, even if they don't use it like that, having when the child decides to want to purchase their first car, teaching them the mechanism of borrowing from the family bank. So we have all this financial energy that's going on. The kids are off earning income from jobs, and then they're taking a loan with a secondary body that has nothing to do with the family. All that energy is going away from the family. But if they could take a loan from the bank of mum and dad, or i.e. their own policy that's building, then they would be able to recycle that money back into their own system. And by doing so, they're building something for themselves as well that will likely get passed on to them later in life. So having that, you know, money doing multiple tasks is a real key to that, and just watching where the money's flowing. So when I talk about financial energy, it's like, where is the money going? Just follow the direction of it. And so that's the piece around the energy. If the direction is back into the family to be reused by the family for more purposes, then that's just going to create more opportunity for everybody in the family across multiple generations.
That's an excellent description of generational leverage through a financial product that's been around for 150 some odd years in Canada, and over that in the United States. Dan, when I'm driving around, one of my favorite bumper stickers that I see is a bumper sticker that says, "Farms feed cities." You know, and I live in downtown Toronto, and I see this bumper sticker everywhere. Whether they're farmers or they're urban people, they like to remind us city folk that farms feed cities. Farmers, something you're very passionate about, historically have relied on the family model, the generational of handing the farm down, keeping the farm in the family. You know, what are farmers challenged with today in that regard about keeping the farm in the family? And what would an infinite banking strategy on the family, on the children of the farmer at the family farm, and what would that look like moving forward for really our nourishment at the end of the day?
Yeah, no, that's really well said, Cole. So obviously, yeah, if people don't know, if you don't know that, you know, farms are what keeps the food on our table, you need to learn that. And it's kind of a key industry across the world. And without farmers, you know, we're going to struggle to keep our food coming in the way that we need it. So I appreciate that. When you think about the family, and quite often, you know, some farms are big corporations now, but still a lot of them at the heart of it are family-run businesses. And so when you think about how important is it to have and utilize the infinite banking concept as part of your farm, and what can it all do for you? Well, it's endless. But when we talk about multi-generational. One of the things that I find from talking to farmers all the time is they're interested in keeping that farm in the family. And the cost of transition from one generation to the next generation can be huge because you got all the family dynamics at work. And if if it's one thing if you've just got one child and the farm's being passed over to that child, but say you have multitude of children, and then you're trying to make it fair to everyone. Well, this concept really helps you as you start, you can start policies on those children when they're young, and you can have policies in place to support your farm, and together those give you a great way to transfer wealth. And where I see it used a lot is just to make sure that at the end of time, when we're transitioning that farm over to the next generation, the other siblings are dealt with fairly. It's not always going to be equal, because it's not always equal, but it's fair. And one of the things that works very well for that is dividend paying whole life insurance. It gives you ways to keep that farm together, because people want that farm to stay whole. Like you talk to a family that is running an operation, they hope that farm goes on for generation after generation. And this whole concept, I don't care whether you're talking about farmers or just families, how do you take the wealth and move it on from generation to generation? This is a great way to do that. Infinite banking not only allows you to use the equity that you have while someone's alive, it also is great for estate value and for generational wealth transfer.
Yeah, that's so well said. Liz, something you're very passionate about is our real estate investors. You are a real estate investor. This is something that you've been studying, doing a deep dive in for many years. Like farmers, real estate investors, your colleagues, your peers, have kids. Are real estate investors using life insurance on their children to leverage and access the potentiality of more properties, more liquidity, more opportunity?
Yeah, certainly a possibility, and we have people who are doing that. The other big piece, I think, as it relates to children and real estate investors, is a lot of real estate investors haven't necessarily thought about the big tax problem that's the inevitability. So there will be a tax bill to pay as when the transition occurs on all those assets, and most people have worked really hard to build up a portfolio, and they want to pass that on to the next generation. They want their kids to start off with those assets, and Whole Life provides a structure around solving some of those taxation problems and enabling some of that planning around transitioning those assets to the next generation without, effectively creating a fire sale at some point such that that tax bill can get paid. So in terms of, use throughout lifetime, in terms of what they can do in terms of creating leverage in their investing, but then also what they can do in terms of creating leverage in their investing, but then also in those assets. So
yeah, that's so great. Dan, I
to
often
Dan's
say
point, they can stay in the
for
family.
the price of a Tim Hortons a day or the price of a Starbucks a day, you could change the trajectory of a child's life and that child's child for generations to come. What might I mean by that? $100 a month is basically a Tim Hortons a day. $200 a month is a Starbucks a day. As infinite banking practitioners, you like to build these policies with life pay, and we like to give you some jargon as you're watching these videos. We like to give you some kind of what the advisors are doing, what we're saying, what we're speaking about, so that you can come back informed and say, really, what is the difference between life pay versus a 20 pay type policy? And these are key things that you should be picking up on when you're talking to your advisor, when you're looking, $100 a month, a Tim Hortons a day or a Starbucks a day, or our U.S. viewers, that Tim Hortons is, we have them in Buffalo, but I think that's about it. Buffalo is basically Canada. That would be a Dunkin' Donuts a day, and yes, we know you have Starbucks. So, what would that look like for $100 a month $200 a month, what would that look like for the trajectory of children moving forward?
Yeah, that's a great question, Cole. And when you think about it, what a lot of people don't realize is that, as you put that $200 a month into this asset, that's going to allow that child to, you're going to be able to use it in the first parts of their life, and as they get older, you can transition that over to them, and they can use it. They're always, as these things get more and more mature, you're going to get more money out of it than it ever put into it by a long shot. Like, it's not even, like, when you think about it, a young child getting started in this, by the time they get to be in their 40s and 50s, they'll have access to a ton more money than they was ever put into that policy. And it's just a great way to, provide wealth for them and access to them for capital as they go through life. Like, it's just a small price, because when you think about it, I love how you put that, Cole, like a coffee a day, you can change someone's life. And there's a lot of, when you think about that analogy gets used in different things, and it's, who would you rather think about than a child or a grandchild? Because I know a lot of grandparents, being one, where it's important to get something started on your grandkids. And this just gives a grandparent an opportunity to start something, a legacy in that child's life for, like you say, a coffee a day. Like, I don't know where else you can do that.
I think a really important point too is that because it's for the whole of their life, they, by the time they're 40, it's actually probably only going to be, they'll still be putting in the same premium, but to them, the value of that, of
Exactly.
what it will actually be costing them, will probably be, a quarter or an eighth of a cup of a coffee a day. So because money has inflated, but they're getting enormous value. So it's also looking at that impact of how much it's actually getting cheaper and cheaper and cheaper throughout their life to continue to fund that policy, and that's to me is just like staggering.
When they get to that 40, 50 age bracket, they're going, I wish this was bigger. Like, I wish they could put more in, because they'll just see how great of an asset this is. And man,
That's right.
If mom and dad would have just started that at like $300 a month, what? And they're just going to be wishing, I wish I could put more in, because it's going to be such an efficient tool in their toolbox. It's like, when they get age, when those policies get aged like that, it's just like, it's gold.
It's literally liquid gold, and we often, one of our sayings. I mean, the late great R. Nelson Nash described the golden rule, and those with the gold, make the rules, and we could ask you what you'd like your asset to look like, and would you like it to look like gold, or would you like it to look like whole life insurance? And I'll tell you, I know what I want mine to look like. All right, I want to look like whole life insurance, and that's just me. Gold's nice too, but I'll take whole life any day. I'm going to run it back to you guys for last thoughts and kind of closing thoughts, and the power of and I'll say this. I'll give you my punchline before I turn it over to you. That'll maybe rev you up a little bit and warm you up. And I know Dan and Liz have heard me say this probably about 1,000 times, but here's the secret sauce. If you want to run for prime minister and president simultaneously, it'll be a first ever. Here's the platform. You stand at every maternity ward, and this is what you run yourself out there to everybody all over the news, CBC, CNBC, CNN, and you tell Anderson Cooper, Anderson, I'm going to run for prime minister and president by doing this. I'm going to stand at every maternity ward, and I'm going to promise that every child in North America will receive a birth certificate, like they do, and a life insurance certificate, a contract to go to their nearest whole life insurance company, preferably one that's mutually owned, and they're going to get a $100 a day or a $200 a day contract just for 20 years. It could be $48,000 over 20 years, and we're going to see how that exponentially turns into utopia moving forward. So that said, Dan, Liz, either one of you, fire away. Give us your final thoughts on the importance of infinite banking and whole life insurance for kids.
Yeah, a lot to take in there. First off, Cole, just to go back to what you're saying about the $100 a day, like that would be a pretty interesting policy. It's more like $100 a month, I think, is what you're thinking
Oh,
of.
did I say a day?
Yeah, yeah. So
Right. Okay. Thank you.
yeah.
Right.
So yeah, we just wanted to clarify that, because if you're giving them
Yeah.
away, oh, yeah, it's going to be, yeah,
Right.
yeah, yeah, exactly. Yeah.
He wanted the
That
votes.
just sounds like a politician.
He wanted the
already.
votes.
Yeah, it's good. But yeah, no, I guess it's when you think of our future, what do you think of? A lot of people, they look at young people and they look at kids and they they have a kind of a negative outlook on life. For me, it's just the opposite. I look at my kids, I look at my grandkids, and I go, it's just great that when I'm gone, they're going to carry on doing what they're doing, and part of that's going to be something that they probably learned from me. And I think that's huge, just to pass on something that can add value for the rest of their life and the rest of their children's lives, and on and on. So I just think the upside for a family with the infinite banking concept is even hard. It's immeasurable. It's hard to measure how much value a family could get out of starting a policy on a child.
And I think, the big piece for me is that this really has the power to change generations. So a lot of people, wish that they could do something to have, their children and grandchildren have a different experience perhaps than what they experienced growing up. And this is the way to do it. It provides a structure that can really change the trajectory of that family going forward. So hugely powerful for kids.
$100 a day is roughly $3,000 a month. And I'm going to go illustrate a policy right now, and I want to see what that would look like for the child when they're 20 years old. That would be a monster. This is why I stay close to people that are sharper than me. Dan and Liz, thank you so much. Viewers, if you like what you've heard today, and I know you have, please, most importantly, leave a comment for us. We'd love to get your feedback on this. You can connect to Dan and Liz at Ascendant Financial in the show notes below. Give us a thumbs up. If you haven't already, please subscribe. Dan and Liz, have a blessed and fulfilled day. Thank you for serving our viewers with this needed knowledge about whole life insurance and infinite banking for kids.